Hello everyone, my name is Maria Thomas and I work for Allianz Research, the global team of economists, strategists, sector advisors and foresight experts of the Allianz Group, led by Ludovic Subran. Welcome to Tomorrow, a podcast where we'll be talking about our latest analyses of economic and capital market developments, as well as our views on trends affecting risk management. Let's get started. Transformative years lie ahead for the global insurance industry as the world is changing rapidly and risks are rising. In this episode, we speak to Arne Holzhausen, head of Insurance, Wealth and Trends Research, and senior economist Patricia Pelayo Romero about the results of the latest Allianz Global Insurance Report. Hello, Arne and Patricia. Welcome to the podcast.
Hi, Maria. Thank you.
Hello, Maria.
So let's start with my first question, which is, how did the global insurance industry fare in 2023?
Well, we look back to a very strong year, in fact. Global premiums in all three segments, that means in P&C, in life and health combined, increased by 7.5%. And we have to go back to the times before the global financial crisis. We have to go back to 2006 to see similar strong growth. So at first glance, a very good year. But if you dig a little bit deeper, then it appears that most of this increase in premiums was driven by inflation. For example, if you look just at the last 3 years, 21, 22, 23, where we have this elevated inflation, total premium increased by more than 20% in just 3 years. This is really remarkable. But if you look then in the real development, in real terms, the increase is less than 1%. So clearly, more or less, in real terms, premium income stagnated over the last 3 years. And that means there's clearly less than meets the eye in the nominal figures for last year.
And are you seeing any important shifts in certain regions or countries?
Well, it's quite interesting with the demographic changes and the wealthiest nations in Asia facing aging populations as well as higher than usual interest rates. Life insurance products gain more traction, and we've seen a recovery of the life segment. Much of it has been driven by Asia, the biggest life market in the world. And with a global market share of 39%, the global written premium growth was almost 15%, way above the 10-year average annual growth rate of 5.2%. China is, of course, by far the biggest market in the region, as it accounts for almost every second euro written in life. The growth of the P&C segment last year was driven by all regions around the globe. North America remained the largest market, and its global market share is actually 54.2%. With a projected increase of around 7%, the increase in premium income has only been slightly lower than in the previous year. In contrast, in many other industries where advanced markets are losing relevance vis-a-vis the emerging markets, the global insurance industry is still dominated by the US. In fact, over the last decade, the US insurance market increased its global share to 44% of the global market, and it was already at a very dominant 41%. We see that other advanced economies like Western Europe have lost market share, and as well as Japan, which had previously a 9% global market share, now only holds 5% of the global gross written premium. What they lost, China gained, as it went from holding a 7% of gross written premium to an 11% of the total market share.
So looking ahead, what is the outlook for the next decade?
I would describe our stance as cautiously optimistic. We expect overall, again, for the three segments, 5.5% growth over the next decade. And that means that growth insurance premiums will exactly match what we expect also in GDP growth and growth in economic activity. And that's quite a progress because in the last 2 decades, insurance premiums trailed behind the overall global economic activity. Why? We think that this should change. What is the sources of our optimism? I think there are 2 points to make here. One is for sure that we see that risks are increasing around the globe, be it nat cats, be it cyber, be it health. So there's an increasing risk awareness, and there's also increasing demand for protection that drives especially insurance premiums in the P&C segment. On the other hand, we expect interest rates to stay high for the foreseeable future. We do not see any signs of a return to the low yield environment, to the zero interest rate environment. So higher interest rates are here to stay. And this is positive for sure for the life segment. They will become more attractive. Products will become more competitive in comparison to other savings products, and this will lift premium growth in the life segment as well.
Okay, and I think you may have touched on this a little bit. What are some of the big challenges for the industry in the next decade?
Yeah, I mentioned this rising risks. And in our view, this is really a double-edged sword because on the one hand, for sure, it drives demand for protection. On the other hand, ever higher risk brings us also closer to the limits of insurability. But what do I mean with that? I mean, insurability is described as a situation where still premiums are affordable for our clients, be it households, be it companies. But if risk get ever higher, and if you see like now in Germany, they have flooding, regular flooding, then premiums will so high that many of our clients will simply not be able to pay them. And what happens then? Then for sure, it's a situation that is not acceptable for policymakers because many of these households, companies then go naked. This means stay uninsured. Policymakers step in and the solutions in quoting, are lower in risk premiums, be it by subsidies, be it by regulation, or even as we can see in the US right now in many areas that public carriers step in, that there's a state-backed insurance to lower prices. But this will not be really a sustainable solution because it will make the risk for the moments disappear, that you don't feel or don't see and don't have to pay for the real risk. But for sure, it's not disappeared. Eventually, disaster will strike and the results will be even more devastating because with lower risk premiums, you have no incentive to invest in prevention. You have no incentives to invest in mitigating these risks. And this is really something very dangerous situation because the result will be that losses will be even higher because we have more wealth, more asset in the risky areas. So I think what is really the big challenge is here to have really a change of the mindset. And that's not only for policymakers, but for the industry as well, because we come from a situation where we enter the situation after the event, where we offer loss indemnification, where we say you have incurred a loss and you have financial losses and we make you financially whole again. Fine. But I think now with this rising risks, with this new challenges, we have to come to a point where we say more important than afterwards to clean up is to prevent risk, to mitigate risk, to be prepared. I think this is the new name of the game. And this is something that requires from all parties to change a little bit the mindset, but in particular, it requires that we first and foremost have the right price for all the risks. Because as usually, what you cannot measure, you cannot manage. And risk management can only function if we have a more or less accurate understanding what is at stake, what are the risks involved, and then we are able to make the necessary step to invest in prevention, to avoid risk altogether. What could also mean now in the situation when we rebuild after a flooding, we have to resettle that. We don't rebuild at the same place, but at different places, less risky places. This is, I think, a challenge that the industry, but also policymakers, the society at large, has to cope with in the coming years.
Okay, and my last question is about AI. So in the report, you wrote that few industries rely on AI's foundation, data, as profoundly as the insurance industry. Can you tell us what the rise of AI will mean for the sector?
Yes, we've actually been benefiting from AI for quite a while now. AI is anything but new. Scientists and philosophers have been dreaming about an intelligent machine since well before World War II. I think this question opens up a great opportunity to make the distinction between AI, generative AI, and the next frontier, which is AGI, artificial general intelligence. So artificial intelligence is a technology that enables computers and machines to simulate human intelligence and has problem-solving capabilities. While traditional AI that we've been using for years in the shape of, for example, machine learning, had limited applications and limited learning capabilities because it was programmed intelligence, now with the improvements of LLMs, so large language models, Gen AI is capable of generating output such as text, images, or code. It relies heavily in machine learning, and an oversimplification that I've been using recently for LLMs is that it's a bundle of quote unquote if functions that give a probabilistic value to different quote unquote types of words to produce output. The largest players are companies such as OpenAI, Anthropic, Microsoft, Google, and Baidu in China. AGI is the real goal of these companies, as this is the type of artificial intelligence that could match or surpass human capabilities. Some say that it can be done, some say that it cannot be done, and we're still waiting on whether it's a few years, a decade, or never. But generative AI will give us the capability to increase our productivity across the insurance value chain. We are not necessarily known to have profited from previous technological advances and have massive productivity like the one that we've seen in the technological sector. But now, for example, in marketing, we can refine our predictive analytics. We can automate demand analysis. And with this, we might be able to tap into new marketing channels, tailored outreach, and other benefits. In the product development side, we can improve our analytics of customer preferences, and that will take us into product innovation, because the better we understand our customers and their needs, the more we are able to do some accurate pricing, to do tailored products, and to do rapid product development or adjustments. Then again, when we look at the sales and distribution side of the supply chain, we see that there's this massive possibility for tailored product advice and for sales process automation, which would, of course, reduce our sales costs, and enhance affordability. Therefore, tapping a little bit into this insurability problem that Arne was talking about. If we look at the underwriting side, there's improved image analysis, there's more natural language processing, and this would help us with improved quality and speed of risk analysis and the proper assessment of more complex risks. And then in customer service and policy administration, we have predictive analysis, we have voice recognition, we have risk prevention and mitigation, which again allows us to have more personalized services and improve customer engagement. And just to finalize and wrap it up, with claims management, which is an important part for us to be profitable, the prediction of claims patterns and the image recognition, as well as anomalies and fraud detection, will help us with accurate claim assessment, fraud detection, and faster responses for our customers.
Thank you, Arne and Patricia.
Thank you.
Thank you, Maria.
That's a wrap for this season of the Tomorrow Podcast. Thank you so much for listening. We'll be back with brand new episodes soon, but in the meantime, you can find all our latest reports on Allianz.com or by subscribing to the Ludonomics newsletter via the link in the description. Thanks again.